For a conversation on China's export ban on gallium and germanium, I have David Lennox, resource analyst at Fat Profits, joining us from Sydney today. Well, David, first of all, I'd like your thoughts on the effectiveness of this export ban. Buyers can still source from elsewhere, right? Although at a higher cost. Do you see more pros or cons for China?
Well, look, certainly if you have a look at the markets in both of those particular commodities, they are very much supplied by China. And if we do see that ban starting to be implemented from today, then that will cause other customers to now start looking for other sources of germanium and gallium. At this point in time, one would suggest that we've had enough warning for the markets to have moved somewhat away from China, but their significant presence will make it very difficult for all customers to actually find what they're looking for. The only blessing for consumers of gallium and germanium is that we are seeing a slump in those particular commodities that they go into, i.e. particularly chips. So that's going to help ease the pricing a little bit.
Well, if the procurement of the metals has to pivot away from China, what other alternatives out there for customers?
Really, at this point in time, there's not significant amounts of alternatives. We are starting to see now programs being put into place where old military vehicles and old military weapons are being stripped down, and certainly the metals are being recovered from there. So that would seem to be one of the main sources, especially inside the US, where there's significant quantities of old military vehicles and old military electronics around. So that would certainly help the supply side, but one would suspect that we are going to have to look for new supplies of both commodities outside of China, and already we're starting to see some move down that road where we're seeing particular companies, especially those rich in zinc or bauxite, which is where both those commodities can be sourced from. They're looking at perhaps alternative ways of now producing both, but it will take some time.
I'd like to circle back to your comments on the pricing. Did you say pricing will likely to go lower than what it is now?
Look, one would suspect that given that we've had this information available for some months now, that we would have seen both prices actually escalating away. As far as we can detect, gallium prices have actually slipped a little bit, given that we have seen the surplus of chips inside the electronics industry. So that's pushed that price lower, not in fact higher. The other price, germanium, it's in fact a little bit more difficult to track, but we think it's been steadily rising over the course of the last couple of years, and we can't really see that changing. So from a trade point of view, the announcement really hasn't had that significant impact. If perhaps another commodity that was controlled by the same quantity as China controls both had said, well, we'll ban it, we would have seen skyrocketing prices. But as I've already said, it is the softness in the chip markets that are probably keeping those prices somewhat in check at this point in time.
Well, David, would be interested to know what other sectors will be impacted, apart from chips, obviously. And with the latest global push for net zero and electric cars emissions, is China's export restriction on those key metals going to pose as a major setback?
Look, we don't certainly think so at this point in time. We think there's probably the ability for some manufacturers to look for substitutions, and certainly we know that the search for viable substitutions is now well and truly underway. But it will slow up perhaps the advance of electronics, and certainly green electronics, into the world, and that's probably going to be one of the key areas that will be held back over the course of the restrictions that China places on both these particular commodities. But overall, we are seeing plans going ahead for electric vehicle production to go mainstream. That's now well underway. And of course, we're well aware that electronics continue to be produced out of factories at a fairly rapid rate. And that's going to, we believe, continue as well.
Well, David, as we know, China has slapped restrictions too on the export of drones and certain components used in the manufacture. This move, could it hurt production abroad of the aerial vehicles, including types employed by the armed forces, especially in the Ukraine war?
Look, certainly one would again suspect that the answer would be yes, but we've had now a number of embargoes on a number of items around the world because of various things, and producers are starting to get very apt at being able to source what they require from other places relatively quickly, or they in fact change their source of manufacture altogether and go to another product type. So look, overall, we do believe that yes, we will see perhaps some softness in the drone industry out because of what's being done. But overall, we expect to see those particular types of vehicles, especially given the use that unfortunately we've seen inside the Russia-Ukraine war. We will particularly see those sorts of vehicles well and truly produced into the future.
Well, David, thank you for your analysis. Appreciate you coming on the show today. David Lennox, resource analyst at Fat Profits.